Chandra, good afternoon. Fantastic to have you back on ET Now. Chandra, I'm interacting with you a week after the NASSCOM guidance and one day after when Cognizant said the cat amongst the pigeon by the forward guidance. So, Chandra, normally anchors decide the first question. This time I'll give you the option. What do you want to start with, NASSCOM or Cognizant?
I think the questions are the same. Nikunj, nice talking to you. I think I would like to put some data points. From a TCS point of view, our calendar year 2015 constant currency growth is 13.5% on a year-on-year basis. And that translates to about $1.85 billion in the CC dollar terms. And on an organic basis, TCS incremental revenue remains the highest in the industry. If you take the financial services, banking and financial services on the CY 2015 basis has delivered 15% in CC terms as opposed to the 13.5% for the whole company. So I think we have had a good year from a constant currency basis, both for the company as well as for the financial services. And I said during the call in January that we don't see any major headwind, and the three different areas that we had issues are slowly sorting themselves out. But from a financial services perspective, our business continues to look good.
Chandra, what you also told me in the month of Jan was that it was too early to get a sense of client budget. We are interacting with you now, it's middle of Feb, so I'm sure you have a better understanding of the client budget. So has anything changed? Has more clarity come on the client budget for this year?
I think I would like to reiterate that we have not seen anything negative with any clients. Overall, from the financial services perspective, TCS is pretty strong because of the ability that we have to bring our capabilities in digital, governance, risk, compliance, our investment in terms of our products that we have, banks, and also a strong technology and operations. With all of this, we are able to help customers transform in the digital world. Whether you talk about a bank like a DNB bank in Norway in their peer-to-peer payment transformation, or whether it is building the largest cloud network for the data analytics for one of the largest banks in the United States, or partnering with Commonwealth Bank in Australia, or partnering with the Fortis Bank in setting up a mobile bank, all mobile bank, or banks in Latin America. I think we are playing across the globe in all areas of digital by leveraging the end-to-end capability we have from a domain and a technology perspective. The other point that I would like to highlight is insurance was a weak performer for us in calendar year 2015, but we are beginning to see a lot of traction in insurance, and the year has started very well from the insurance perspective, not only from the order book point of view, but also from the pipeline point of view. So we expect insurance to do much better in calendar year the financial year 2017. So I think financial services as a whole is going to be a excellent year, is where we are at this point in time. Then if you look at other industries, whether it is retail, whether it's manufacturing, whether it is life sciences, all those industries are intact, and we don't see any specific client-specific headwind in any of these industries or in any of these markets.
It's good to hear that, Chandra, but I'll tell you what is disturbing markets and your shareholders. It is that for the longest time, Cognizant has managed to grow at a run rate which has been higher than the industry average. They are of the view that they will only grow in the range of about 10 to 14%. So if an outperforming company is indicating that things are slowing down, is that an indication of the sector, or that is a company specific issue?
So I won't be able to comment on any specific company, but I have mentioned it to you in January. I would like to reiterate again that technology spend is vital for companies in every industry because of the huge digital transformation. We are seeing it in big data analytics, we are seeing it in channels, we are seeing it in Internet of Things when it comes to B2B companies and manufacturing companies and asset intensive companies. All of this are big opportunities. So I believe that the industry is poised for taking this opportunity. I won't be able to make any specific remarks about any company or about a particular quarter, but overall I think from a investment point of view, from a technology point of view, from what the company is to achieve on the ground, this is what I see. Obviously you have macros and macro issues which you always have, and those issues you see.
Chandra, I may sound slightly repetitive with this one, but I don't want to get this one wrong for our viewers and for your shareholders. What you are confirming to us is that it is business as usual for TCS and the BFSI vertical where everyone is raising eyebrows, excepting the Diligenta part, everything else in the BFSI vertical is looking strong.
Yes, that's correct. I can confirm that.
Chandra, given that how things have been off to a shaky start for 2016, both in terms of outlook and also in terms of economic assessment, what are the sound bites you're getting from your clients? Are they ready to commit more, or they are still in that no man's land where they want to give you more, but they are not sure when?
See, I think overall, I feel from specific clients that we serve, generally there is an investment that's going on in digital, but the pickup will happen sometime now and March when the projects will begin to start. But some companies definitely are under tremendous pressure to drive efficiency. So that translates into consolidation, market share gain, or infrastructure transformation, etc. So the spend is of two types. That trend still continues, where some places you drive efficiency and transformation, and in almost every place you see digital opportunities.
Chandra, let's address the other aspect, the NASSCOM guidance. Now, we've debated both publicly and privately that NASSCOM guidance should not be the benchmark for a company like TCS because of the size and because of the base. So, you will not give me a guidance number. And if I have to use NASSCOM guidance for benchmarking purposes, how should I read that number? Will you grow higher than at least 12%?
See, I think I can only say that the calendar year 15 on a CC basis we have delivered a 13.5%. That is definitely ahead of what NASSCOM has shared with regard to the calendar year 2015. With regard to next year, I can only say that that is NASSCOM puts this number, and they have multiple sources of inputs, and we take it as one data point. But for me, the most important data point is what I hear from my clients and what I hear from our own managers, and on top of that we have real data in terms of pipeline and order book. So I would like to go by that rather than get into a debate about where we'll be with respect to NASSCOM.
So the first 45 days of this calendar year, have they been have they moved as per your expectations, slightly better, slightly lower?
I think they have been pretty much in line with what I said in the commentary in mid-January. So we will get a little bit more data points between February and March. So I'll be able to lay out a much more clearer picture in terms of the client spends in specific areas when we meet in April. But overall, we have not had any negative news to report.
And the concerns which you flagged off along with your Q3 numbers, whether it is volatility in LATAM or volatility in India business, are those concerns still there or they are getting diluted?
I think LATAM concerns were behind us, and in fact, LATAM did very well last quarter. From here, I think LATAM will continue to grow. We see lots of opportunities, and as I said, Diligenta is also probably at the end of this quarter, will more or less the Diligenta related degrowth will be behind us, and Japan growth momentum needs to pick up, and India hopefully should turn all right. So we are still watching our deal pipeline in India. We will give you more information when we meet in April.
But can I throw in one more joker in the pack, a joker in the pack which we were not anticipating, at least at the beginning of the year, the collapse in crude. Is your energy vertical going to take a hit this time?
I don't think so, primarily because I don't know whether it is this quarter. I can't tell you about this quarter, but basically if you look at the 2017 financial year, I don't see an issue because we don't have that much exposure to the energy sector, or is very small, and I think the hit that we needed to take in the energy vertical is behind us, more or less.
Chandra, the way we look at TCS is that size doesn't matter. The company has got all the margin levers and efficiency levers in place, and they can grow at a run rate which will be higher than the industry average. Can I assume the same, and can I assume the obvious for this quarter and coming quarters?
See, I'm not going to be giving any information with respect to industry or with respect to this quarter. I mean, I've already said that what are the headwinds that we have had during the last few quarters, and how it will pan out for Q4. I've also already mentioned that I think we have had, we definitely have another quarter to go from a Diligenta point of view. Japan, we need to see some growth momentum, and hopefully India should sort itself out. That's another market that we are focused on. And Latin America is behind us, and I think from here it should grow. That's the way I gave the commentary. I will leave it at that. But more importantly, the main messages that I want to leave are BFSI sector is intact, and we are not seeing any client-specific problems in any of our major clients in any of the verticals. I do believe that the capability that we bring, not only from a digital reimagination point of view, but also from the point of view of the domain, the products, the investments we have made, and technology and operations, and the global footprint we have. We are partnering with clients across the globe on many of the transformations, both on the digital side and also on the efficiency and whether it's in the infrastructure space or in the application space. I see all those things to play out going forward.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.